This is a good example of we've got range-bound conditions on US dollar versus Japanese yen on our daily chart. That's the first chart that we look at to evaluate what type of trading strategy we're going to put into play. Currently our top of range is being tested, so moving over to our 10-minute chart, which is the chart that we trade off of, the 10-minute time frame being the prime time increment to be able to trade the Forex market on an intraday basis so that the directional bias doesn't get into trouble. And we can clearly see now here we're testing this number here at our top of range. So we're waiting for our entry strategy to develop. We use one of our two entry strategies based on the pattern that's formed. Currently we were trading at a significant number. And as a reminder, the Forex is consistently range-bound, and we look for reversal activity in those range-bound conditions, and then ultimately the top or the bottom of the range is tested, and then we get momentum-based activity to come into play. So we're not using any type of trend-following techniques, ABC patterns, wave theory, wedges. We don't look for Gartleys or crowns or any of those things when trading the Forex market because the directional bias gets us into trouble. So we wait here for the test of our significant number and then our entry strategy to develop as we test the top of the range here. Number coming into play here as well, as we also look now for a net 10 pip profit target. The reason we look for 10 pips is because the average size move in the Forex on a 10-minute candlestick is about 30 pips. So we look to scalp a piece of that move. That's the benefit of a scalping technique, is we look for a fixed profit target, and the average size is, once again, is net 10 pips. And the way we grow our account is we simply look to add more lots. In other words, we could make this a 50 pip trade simply by going for the net 10 pip move and then trading 5 lots on that net 10 pip move. So we can see here we just need price to move up a little bit more. And one of the areas where people get into trouble with trading the Forex is they're always trying to find the big move. And what happens is the directional bias of this marketplace is constantly shifting. So it makes it difficult to go for the big move all the time. You have to trade with much larger stops. And so it typically doesn't follow most people's equity management. Trading this style of trading, the thin slice trading methodology, what we do is we typically work off of a 10 pip stop. So we're actually here just right now. We're actually at net 9 pips. So we'll go ahead and exit out here because we can see prices starting to slow down here. Once again, we watch minute by minute each candlestick. And so there we can see where we had our top of range breached, and we now have a net 9 pip move in this case, just playing it safe. It's always better to lean on the side of being conservative because, once again, a 1-lot trade is net 9 pips is $90. A 5-lot trade on net 9 pips is $450. And we know what we're watching for. The reason for the early exit is the candlestick is just about to come to the close here. So there we go, looking to scalp using the thin slice trading methodology, where our significant number, strategy number 7 that we teach in our trading program, price breaching the top of range in our range bound condition. Once again, looking for a net 10 pip opportunity. So now 20 minutes has passed since our net 10 pip move here, and this shows why we look to scalp typically 10 pips. One is we know as we move into mid-afternoon, price has a tendency to slow down. 2, once again, we know that the average size move is around 20 to 30 pips. In this case, the size of the move was just slightly under 20 pips. Market conditions always steer us to what size trade we're going to look for. We look for anywhere from 10, 15 to 20 pip moves on average. Once again, we add more lots. This was a setup that occurred earlier today as our significant number was cleared here at this point, also going for a net 10 pip scalp. Price did run a little further, but it's much safer to add more lots and go for a fixed profit target. To learn more about our thin slice trading methodology, a Forex scalping technique, I encourage you to participate in one of our free online webinars that we host weekly. To register, you can do so directly on our website, theforextradinginstitute.com. I'm Steve Rising with the Forex Trading Institute. Thanks for viewing the video, and I look forward to seeing you in one of our online presentations.